Welcome everybody. If you watch the video in Spanish about not buying a home, you are going to enjoy this chapter as we are adding new information, including Robert Kiyosaki and Ramit Sethi's book, this one here, I Will Teach You to Be Rich. In this book, Ramit and also Robert Kiyosaki, they've been blamed, in their own words, in the words of Ramit, they've been blamed of saying that buying a home is not a good idea. Robert mentions that it may be good or bad depending on what you do with it. Especially if you like a more expensive home, that's not something that Robert would recommend. While Ramit says, I never said that. Now, if you want to know what they really said, stop this video and go watch in their own words what they say. So don't take mine or anyone's word for good while talking about someone else's ideas. Just a recommendation. That said, we are going to talk today about why you should never buy a home. This is very important. This is not a catchy phrase. We are going to see 3 real reasons to not buy a home ever. So buy or rent? That's the question. That's the $1 million question. For all of you that like numbers and formulas, we are going to go over quickly about that in the words of Ramit and as Robert Kiyosaki explained it, because both of them have a very clear idea of what it is to own a home, especially if you can't really afford it from their perspective. We're going to see advantages and disadvantages of owning a home. Also, pseudo reasons to not buy a home. I call them this because you are going to see them out there as about why you should not buy a home, but I don't see these are real reasons. I'm going to show you why. Now, it's very important for you to know that I'm not telling you to buy or not buy. I'm telling you the reasons behind all type of theories that you're going to watch and hear and listen to friends out there about why you should buy or not now, and the final decision is yours. I don't want you to sell you into anything, especially into my idea. I'm going to present some facts to you, and the final decision always is yours. For those of you who don't know me, I am a real estate investor myself. I am a homeowner and an MIT graduate, not only in finance. I also studied artificial intelligence at MIT about, I would say, a year ago, a little bit before it became a trend topic. Let's go see the numbers. As we mentioned already, Ramit Sethi said, I never said not to buy a home. What he says is, if you want to buy a home, make the numbers make sense. Don't buy because of it's the American dream. That's what he says. We were sold into the American dream of owning a home, but for a lot of people, buying a home may not be the best, may not be financially savvy. Let's use this simple formula for all of those who like numbers. And this is the cost of opportunity plus taxes and maintenance, interest, and insurance. This is a total divided by the home value by 12. You get a ratio. According to the creators of this formula, this ratio has to be at or below 8.71. The key for this formula, one of those formulas that Ramit is talking about, make the numbers, make it make sense. By cost of opportunity, Ramit talks about the money that you are losing month after month or year after year for not investing your money into S&P 500 stock, but instead you went and bought a home. That cost of opportunity plus the interest that you paid monthly plus the maintenance represents the money that you are wasting or spending in the home and you will never get back. So this is a formula. I leave it there for you, for the ones that like to use it, and I'm going to also explain some hiccups of this formula. This formula doesn't consider the equity that the home is built in month after month and year after year. This formula also doesn't consider that you own your home. Nobody can take it away from you out because the property was sold or whatever. It is your home, and there's no formula that can explain in numbers what this means to you. Now, also in a very practical sense, most of us are not investors. So this cost of opportunity here, that cost of opportunity is not realistic, because if we wanted to invest our money, we wouldn't know where to go, we wouldn't know what to do with it. So this formula starts becoming a little bit not realistic. Now, finally, and also being practical, most of us are not math gurus. I mean, this formula, as simple as supposedly is, there might be some of you at home that didn't fully grasp it. And it's not because I went very quickly over it, but because we are not math people. It's not our thing. We're not interested. And that is the truth. So what Ramit says is spend strategically. He doesn't say don't spend. He doesn't say don't buy a home. What Ramit recommends, and you may find him in Netflix, he has a very interesting Netflix series. He says make your numbers make sense. He says spend and invest percentages, not money. According to him, your fixed expenses, and he says rent or mortgage. So he also is stressing out here, it doesn't have to be rent or mortgage, and other expenses such as debt, utilities, has to be 50 to 60% of your monthly expenses. And this is where his theory makes a little bit sense, because a lot of people are poor home owners, meaning they finally have a home, but they are out of money, they barely can afford the payment. So that's all he's saying. Be mindful, be careful of what you do. According to his formula, 50 to 60% is a good ratio. And this, by the way, is what the banks also think. Ramit mentions four numbers that have to be very important for you in life. The first one, we already said, 50 to 60% of monthly expenses, 50 to 60% of your income. 5 to 10% should go to savings, 5 to 10% in investments, and 20 to 35, and this is my favorite, 20 to 35% in guilt-free spending. I like this because he's very realistic about where should we be spending our money and what should be living at. So Ramit and also Robert, both of them compare a fancy car to a fancy house. So basically what they are saying is, if you are buying a fancy car to show off, imagine how it is to buy a fancy house for the same reason. That means that you're going to be spending hundreds of thousands of dollars over your life just to show off. That's the key of their messages. And I totally agree to them. You may not, but that's the point. And this is why Ramit mentions that when he asks people what do they want in their lives financially, the most common answer is freedom, followed by I want to do what I want and when I want. So can you imagine how hard would it be for you to be free and do what you want when you want it if you are living at a very expensive home for you? Because what is very expensive for you can be very cheap for a different person. There's no set numbers about this, and there are no set answers. The answer is always from you to you. Ramit is very proud of having an almost 20-year-old car, and he's very happy with it. That's fine. It's his life. If you want an expensive car, that's up to you. That's what you want. Just be mindful of what it represents. It's the same with an expensive house. At the end of the day, he asks you to be very mindful to not fall into the trap of having a home because of a sign of status. And whatever you want to buy, run the numbers. Don't buy if you don't run the numbers. That is Ramit's advice. That is why Ramit and the creators of this formula recommend you to consider investing in S&P 500 stock instead of buying a home. But as I said, not all of us are investors. It takes time to be a good investor. It's like any other profession. It's not like, you know what, I wanted to buy a home, but I'd rather buy stock. It's not that easy. So at this point, this option of buying stock instead of a home is not really realistic. And the reason I'm telling you this is because I fell into this trap myself. I didn't buy a home for almost 20 years. When I could, the first time I was able to buy a home, I didn't do it because of this false idea that buying a home is a trap. And it could be, but it's not. That's the big difference. Run the numbers. And bottom line, whatever you decide to do, don't feel guilty. If you decide to buy or to rent, it's your decision and it's fine because it's yours. Also, something very important that Ramit mentions is that the more you spend, the less benefit you get. This is very important because if you can buy a $50,000 car, but instead of doing so, you buy a $20,000 car, which is less than half of the 50, you are going to feel almost the same pleasure, the same benefit. Not to mention transportation is going to be exactly the same. So this is something that Ramit and Robert ask you to consider very, very carefully so you can spend your money wisely and strategically. And remember, your friends and family will have a lot of tips for you to invest or what to do with your money, how to spend it, what not to do. Listen politely, then stick to your plan. Let's take a look at the advantage of ownership. Fixed and predictable payments. I know some of you are thinking otherwise at this moment, but bear with me. We're gonna go to where you want to go. Next, control and certainty over your home. So we already talked a little bit about it. It's gonna be your home. When you're a homeowner, nobody's gonna take it out from there. Number 3, inflation makes your payments better. This is why with inflation, everything is going up and up and up, but not your payment. Number 4, just to mention some of them, equity is money to you, not to your landlord. So even Ramit mentions that if you are not a homeowner, you can go whenever you want. If you're renting, you can go whenever you want. Well, see the difference. If you're a homeowner, and you want to go, you can also do so. But you know what? Once you sell your home, you're going to get the equity into your pocket. This doesn't happen if you're renting. Consider that. In both cases, you can go whenever you want. You can do that. Except that if you are an owner, if you own your home, when you leave, in exchange to a little work, a little extra work, we got to say it, you're going to get most probably thousands of dollars with you. Now, let's go to the part that you wanted to see. Disadvantages of ownership. Unexpected expenses. Maintenance. This is a disadvantage, yes. But for this, there are insurances for, electric surge, hurricane, for all of us that are in Florida, you name it. There are unexpected expenses, yes. But there are insurances for that. Higher taxes. Eventually, taxes go higher and higher, usually, right? Costs and insurances, they keep going up, yes. But this also impacts rents. Not right away, but remember, renting homes is a business. So whenever higher taxes, costs, and maintenance impact a homeowner, that homeowner is going to raise the rent for their tenants. So this is for everybody. This is not a disadvantage of ownership exclusively. This is a disadvantage of living, if you will. Number 3, okay, what if I buy today, September of 2023, where interest rates are so sky high and then interest rates go down? Is this a real disadvantage? Well, it depends. Not if you refinance. You can always refinance your loan. So the idea that also Ramit mentions that you're going to get into a mortgage for 30 years, let me tell you this, I've never known, there might be some out there, but I've never known one single person who got into a mortgage and kept it for 30 years. Never seen it. Why? Because everybody, for different reasons, get out of that mortgage in 8 to 10 years. That's the average today. So if the interest rates get better or lower next year, go ahead and refinance and done. This is not a disadvantage anymore. Now, finally, the very important one, the very interesting one for a lot of us, market crash. What if the market crashes? Well, we're talking about homeowners. You want to buy a home to live, not as an investment. That is a different story. But if you want to buy a home for your family to live and the market crashes next month and suddenly your home it's worth less than what you pay for it, well, don't sell it. You didn't buy it to sell it to begin with, right? So there is a way out of a hypothetical market crash. You don't have to sell your home. Prices are up and down all the time. So if you buy it here, it's going up, then it crashes, eventually it's going to go higher. And this is history. This is not me making up numbers. This is history. If you buy here, starts going up and then crashes, goes back here, don't sell your home at this price. If you at some point want to get into a new home, sell your home somewhere here, right? Anywhere here is good because you bought it down here. So don't sell it when the market crashes, if that ever happens again. Now, the 30 reasons to not buy are we're in a seller's market. Well, you know what? That's true. Demand is higher than inventory. We have higher prices, yes, but you know what? You decide. If the asking price is, let's say, 500, you may even want to offer for 80. That's up to you. You're not trapped. What I'm saying is a seller's market is not a reason for you to go home, don't try, and start crying. That's not how life works. Low inventory is similar as the first one. It is true. There's still low inventory out there. But you know what? You only want one home. You only need one home. So what's the big deal? Third reason, cash is king. You know what? Not always. You may have a great cash offer, but another person has any type of mortgage, but for some reason, the realtors get along. By the way, you need a good realtor if you decide to buy. I can help you with that, but I can put you in touch with a good realtor. I know people pretty much everywhere in the country. Cash is not always king. If you have a good realtor, if you have a good offer, I've seen letters attached to the offers, and the offers are accepted because of the seller liked the letter. How cool is that? So the reason number 4, this is interesting, but I've seen it out there. My loan will be sold. Well, most probably will happen. You know what? Just like any other debt. Mortgages are sold every day, just as credit cards, car loans. So if these really, really hurt you, well, go to your coach and keep whining. If you don't want to buy because of this, that's fine. This is not going to change. Number 5, the crash is almost here. Well, I gotta tell you something. The Wall Street Reform and Consumer Protection Act of July 21 of 2010, better known as Dodd-Frank, changed the game big time. That doesn't mean that we cannot fall into a crash again, but I can tell you that it's not going to be the same as it was back then, because the mortgage rules are almost completely different today. Do you really want to stop living and stop buying because of fear of a market crash? Think about it. Talking about fears, we have the fears about a new market crash. This is nothing new. Let's take a look at them. October 2015. Housing today, a bubble larger than 2006. These are news. Everything, all this is out there for you to see. August 2016. We are in a new housing bubble. November 2017. Home ownership doesn't build wealth. Study finds. I would like to see that study. I would like to see how these people are doing today, right? September 2018. It's better to rent than to buy in today's housing market. July 2019. The housing market is about to shift in a bad way for buyers. You see, all these terrible news have been there all the time, even before newspapers existed, because we like them. For some reason, as human beings, we want to be impressed. We like the bad news more than we like the good news. But at the end of the day, if it's affecting you, you may want to start watching different channels. December 2019. Next year will be hard on the housing market, especially in these big cities. 2019, it's almost pandemic. Let's see after the pandemic. July 2021. Housing boom is over as new home sales fall to a pandemic low. About that. Let's take a look at the fresh one from August 2023. The US housing market may be trapped in a prolonged freeze. Keep in mind, these are news. These are media hooks that they put out there for you to read, to stick to what they're saying. So be mindful of where you're taking information into your head. Now let's go to the 3 reasons to not buy ever. Not in 2023, not in 2024, 2030, ever. Number 1, I don't want or can't take care of maintenance. Maybe you're a very, very busy person, or for any other reasons, it may be physical, you name it. You just don't want to take care, or you can't take care of maintenance. Well, buying is not for you. Renting is a good option. Check. Amenities and facilities, but it's not for sale or it's too expensive. You like their pool, you like their clubhouse, you like the golf course, but it's for rent. Or you cannot afford like a $50,000 or $100,000 down payment, go ahead and rent it. If that's what makes you happy, go ahead, rent it. Especially if renting as well as buying is not taking you, renting and all other utilities and debt, beyond 50% of your income, go ahead and rent. At that point, it's the same if you rent or you own. It's not a difference. If the 50% rule, let's call it, of Ramit is met, you're in good shape. Number 3, location is number 1 for me. Let's suppose for any reason, it may be personal, it may be because of your job, you have to live at a skyscraper in downtown Miami, Philadelphia, New York. Well, go ahead and rent. You don't have to buy. And as Ramit said, don't feel bad about it. Run your numbers and do whatever is best for you, not for your friends, not for your family, for you. Finally, if you like saving time and money, you can contact me for your mortgage needs. This is my WhatsApp number. You can text me, we can set up a call, we can have a free consultation, always free.